Hello, hello. I think we've begun. So thank you all for joining our session this afternoon or evening, depending on where you are. I am Rachel Hirsch, the GP at Wellness Growth Ventures, and today we have the incredible honor of hearing from, I'd say, three of the best in this space. So I'll let them all introduce themselves. Pamela, do you want to start with a little intro?
Sure, happy to do that. Hi, everybody. Welcome. Really happy to be here with you. My name is Pamela York, founder and managing partner of Capita 3. We are an early stage venture capital group. We invest where technology and healthcare converge to disrupt our options for health and healing. Prior to being a venture capital investor, I'm a serial entrepreneur and been doing technology commercialization almost my entire career. So happy to share more with you about the trends that we're seeing happening in healthcare.
Amazing. Thank you, Kerry. Would you like to go next?
Sure. I'm with True Wealth Ventures based in Austin, Texas. We invest explicitly in women-led companies that are improving human and or environmental health at seed stage. And for us, that's a mix of hardware, software, or even consumer packaged goods companies, as long as they're showing explicit outcomes in health outcomes for humans or environmental outcomes, which often are parallel with human health outcomes.
Incredible. Thank you. And Jessica.
Hi there, everyone. I'm Jessica Bell Vanderwall. I am co-founder and CEO of Frame. We are building the AI-powered care and coordination layer for reproductive health and fertility. And we are integrated directly with in-person healthcare providers, OBGYNs, primary care doctors, and fertility clinics, ensuring that people get screened and access to care earlier and driving better outcomes for patients and their providers. We are partnering with over 5,000 clinicians across the United States at this point, and we're also working with a variety of adjacent partners, pharma, large lab partners like LabCorp. And before Frame, I was leading commercial and growth teams at a variety of early stage digital health companies. Excited to be here today.
Thank you all. I'm so excited for us to dig in. We'll dig into a little bit from like a big picture where investor behavior has evolved, a little bit where healthcare has evolved, a little bit of where wellness meets healthcare. But Kerry, let's start with you. Where are LPs and VCs actively allocating within wellness today? And what shifts have you seen over, call it, the past 12, 18 months?
Yeah, I would say the biggest area that I've seen a lot of attention, a lot of it has been media attention, but then there have been big dollars that have flown into the space, is menopause, which is somewhat surprising since it's a condition that's been a phase of women's lives for eternity. And there's finally attention on it. And so that's been interesting, although there hasn't been much beyond, sort of a virtual way to get access to hormone replacement therapy, which is an existing innovation that you can get at your doctor's office already, but you may not have access to the, that kind of care. And then there have been some supplements and other kinds of, over-the-counter type products to handle certain conditions. But what's following on to that, and to be fair, in this case, I'm not sure the funding's flowing yet, but I'm seeing lots of deal flow, is hormone health, which is often tied to menopause because that's where obviously hormone replacement therapy is happening the most. But hormone health can also, be an indicator of, if not diagnostic, or, helping manage symptoms of other kinds of conditions in a woman's life. And so some of those startups are focusing on menopause. Some are focusing on, PCOS or menstrual, or even, what's happening with your birth control. So I'm seeing a lot of attention there. I don't know if the dollars are flowing yet, but I just thought I'd raise it since it's parallel to menopause. Lots in mental health, where a lot of companies got, big rounds of funding. And so, seeing how that space is going to play out, whether there'll be some consolidation and roll-ups, that kind of thing. Again, there have been a little bit of innovations in terms of telemedicine or access to group therapy, et cetera, but not, wholesale innovations other than enabling an online access to those fields. We are also seeing some investment across the whole perinatal space, whether it's, doula care in certain areas or lactation support, physical therapy, mental health, again, for, the perinatal condition. And so, that's been another area that's getting a lot of attention. I will say what's changed right now, it's hard to get funding at all. And so if you've been in this space, the last 2 years have actually been really hard. And I think a lot of investors have gotten more risk averse, so they're going a little bit further upstream, where they're expecting more traction and results from companies before they invest. They're waiting on the sidelines, or waiting for the companies to progress. That's a little bit hard if you planned your fundraise a couple of years ago and now you're at the place where you need the funding, but all the funders are sitting around waiting. So I would say that's a challenge, especially when there's a lot of opportunity for these companies, right? And so I think we'll get to that later in the discussion, but that has been the change, that there's an expectation of more traction and a pause by a lot of investors when the opportunities are still out there. So I would love to encourage people to still dig in.
I have two questions that are rogue. Here we go already. If you don't mind, if I can just double tap a little. In terms of the hormone care, you had mentioned that we're seeing more deal flow probably than ever. Why don't you think dollars are going there yet? And do you think that will change?
Well, a couple of reasons. I don't want to get too clinical because I'm not a clinician, but I think one of the issues is a lack of understanding of the space, and that's both, I think, from clinicians and investors, but also whether and how it works. A woman's hormones vary not only week to week with their cycle, but actually within the course of a day, with cortisol levels and things like that. And so when you're measuring hormones, if I were to just measure my hormones today, a clinician wouldn't be able to do anything with that because it might be quite different. And you have to get multiple data points over time to actually really get a full picture of what's happening with hormones. And so what are the right points in time, what days, what, et cetera, and how many times you're going to collect those hormones before you come to an assessment. But I think that leads to the second point, which is it's not been traditional medicine to manage hormone health. So if you talk to your traditional doctor, they will probably tell you not to bother getting tested. But if you're talking to a functional medicine doctor or any of the, sort of hot longevity, the Peter Attias and the, those kind of people, they're very interested in this space. So it's also not, there's just this dichotomy between people are investing in sort of new forms of, data and ways that healthcare happens, and then the traditional ecosystem.
And Rachel, I'd be happy to chime in there. Again, I'm not a clinician, but I will say as somebody who works alongside a team of clinicians and frankly works alongside a group of OBGYNs that we partner with. I mean, I think you're spot on though, Kerry, in that, unfortunately, these numbers also don't look big on the surface. Like PCOS, for example, impacts 1 in 10, which I actually think is a huge population, and I have PCOS, I'll say, but 70% of PCOS patients remain undiagnosed. So again, these are things that are not commonly screened for. They're pretty complicated, like the diagnostic criteria are still quite vague for a lot of these conditions. So the numbers don't quite look big, but they are a lot bigger than people think, and they impact so many other facets of healthcare. And I feel like we're just now starting to get our arms around that. And so again, I do think there's more to be done there. We are starting to see some companies break through, but I think we're in the early innings there too. I would agree with you, Kerry. And I think more will come to light as we start to see some of these companies break through. I mean, we're tackling this topic ourselves as well.
I mean, one of the things to throw in here too is at the beginning of these new biomarkers, or ones that hadn't been previously served, all you're really getting to do is collect data, and some people might make early observations, but you don't have the years of clinical research. So a few years ago, we learned about a company that was working on a sensor that would go into a woman's bra to measure heart activity from 3 different locations, because the traditional monitor, and again, I'm not a clinician, so I don't remember the name, that measures heart variability, et cetera, for, cardiovascular conditions, only measures in one place, and it represents more how a male needs to get measured. So this new bras was going to be really fascinating in terms of new data around how heart disease presents in women, but it was going to need 10 years of data and clinicians interpreting that data and doing clinical studies on it before it actually became a new way to treat women and actually have an impact, right? And so there's a long haul here before maybe necessarily we go from, hey, capturing the data is point one, but actually improving outcomes might be further down the line. And so it's a little bit more investing in the science and the opportunity versus, something where it's already known and now we're just enabling it through tech, for example.
Thank you. I have more there, but we'll leave that one there for now because that's a personal interest. But Jessica, will you, from your perspective, since you are coming from a different viewpoint than Kerry, will you tell us a little bit about where you're seeing dollars being allocated and sort of the shifts from your founder perspective?
Yeah, I mean, it actually dovetails really nicely off that comment, because I think what's fascinating is, almost to that exact example, Kerry, and you see this all the time too, these companies have kind of lived on an island direct to consumer, going direct to the consumer, trying to help them with monitoring. And I think that was kind of like the 1.0, maybe even a little bit of 2.0 phase. But I think what's really exciting is now you're starting to see the incumbents, the B2B players, start to meld with the direct to consumer a little bit more. And you're kind of seeing this B2B2C evolution really crop up. And even if you look at what's happened with Oura Ring over the last few months in particular, right? You really thought about that as a direct to consumer brand. Now you see them partnering with so many different players in the space. And so I think what's exciting to me is kind of a melding of the worlds, like the innovators and direct to consumer starting to come together with the big strategics. And, frankly, that is where we've sat from the beginning. But I think that's one big trend. I think the other big thing is, definitely wellness has moved from just a kind of feel-good product or investment to something where we are looking to measure based on outcomes. And I think, as someone who comes from healthcare, I think that's spot on. But I think it's definitely something that I'm seeing, at the table with both myself and other founders. I hear more and more now. What are the outcomes? What have you proven? Where's the evidence of this? And so I think that's the other standard that founders are being held to. Selfishly, today we published our first peer-reviewed clinical research, so I'm feeling very good about this, and it's something we've invested in from day one. But again, not always been the case. I think again, it's been viewed more as a feel-good versus an outcomes-based investment, and I think that'll be a big shift too.
It's interesting that you say that CPG direct-to-consumer piece with the partnerships. I have been saying for a really long time that CPG brands and direct-to-consumer brands have built such trust with the consumer, especially the female consumer. And there is such distrust in a lot of ways with the healthcare system. And so what an opportunity for them to collaborate and partner to sort of meld the difference and maybe close the gap a bit.
Yeah. And I will say, like, again, spending a lot of time with clinicians, OBGYNs, primary care doctors, they would love to see this more integrated too. Like, they want that data in their EMR. It's just, this stuff is hard. And so again, I think we've got to start bringing these two closer together. And I think it's a win-win on both sides, and hopefully will improve trust all around.
Yeah, I love that. Pamela, we've talked a little bit about the B2B, B2C, B2B2C. Will you tell us a little bit about where you're seeing the biggest breakthroughs in science that's supporting this? And then go a little bit deeper on that movement from B2B to B2C, if you don't mind, please.
Yeah, I'd be happy to. And maybe just to provide a little bit of context in terms of how we think about this and what we've been seeing over the years. My partner and I combined we've managed 5 funds, over 400 million AUM, 200 exits, 200 transactions with 50 exits over many financial cycles. And I say that because we have seen a huge evolution in the past decade in terms of what's investable. There was a time when you couldn't use the word wellness in venture capital because it was considered woo-woo or, definitely not evidence-based. And so I think all of us on this panel are just thrilled to be able to say we've shifted into a different realm where, 20 years ago, VCs were investing in medical devices, they were investing in drug development in terms of healthcare or, perhaps healthcare systems. Since then, we've evolved into every sector pretty much. And the things that we're most excited about, we started as a B2B investor. This is about 5 years ago, actually. So this illustrates how fast things are moving. We wanted to be able to invest in things that were evidence-based, potentially direct to consumer, but we didn't really see much. And also there wasn't, even if there were technologies there wasn't an appetite for it in terms of the investor base, the institutional investor base. And since then, we have shifted. We have 3 companies are in our portfolio now that are direct to consumer. One of them actually shifted from B2B to B2C, direct to consumer during COVID because of the challenges of actually selling into a healthcare system. But the other 2 companies, started out as direct to consumer because the science is there, the evidence is there, and the consumer demand is there. And so the areas that I'm really, really excited about, there's a lot of them, but 2 that I think are really standouts. In addition to women's health, which has been talked about here, but also brain health and gut health are 2 areas that are just so crucial for our overall well-being and for population health. I don't think we can overstate the importance of gut health and brain health and overall population health, but also just our day-to-day, sense of well-being and capacity to function at our optimum level. So those are two areas that we think are super, super exciting. One of them I'll just mention quickly, this company NextSense was spun out of Google X. And basically, this is kind of both super exciting and a little bit scary because they're developing a platform that actually engages with our brain waves, with our EEG waves. So the capacity to read those waves, and there's a movement here. There's a number of companies that are starting to work in this space, especially for things like, early detection of epilepsy, for example. So there's tremendous clinical applications, but there's also consumer applications. The most important ones are sleep and focus. Like, who doesn't want better sleep, right? Who doesn't want better focus? And they actually hired the person who helped build the Apple Fitness platform. And so what they want to do is be and you can think this is exciting or you can think it's scary, but it's a platform to the brain, really, in order to really develop all different kinds of applications to really interface with the brain for improving our health. So those are two examples. I mean, I can give you more, but those are some of the things I'm really excited about.
Some of them are new to me, but getting me excited as well. I think there's and we touched on this earlier. There's a little bit of a discrepancy with the demand, the need, then to the science, and then to the cash flow, and then really to the exit. So I guess I want to talk about a few different pieces within that ecosystem to some degree. What do exits look like? What will they look like? When will we start to see them? And what do changes in the healthcare system look like, both where we are and where they're potentially going? Pamela, go for it.
I think one of the things to give context on, depending on where the audience is coming from, we need to acknowledge first that there's a dearth of exits across all companies right now for the last couple of years. So the IPO market has been mostly stalled. There have been a couple of companies coming that have been able to squeak through. M&A has also been stalled, and that's where obviously a lot of strategics and growth equity, PE kind of come in. Due to just all the confusion around the economy and tariffs and, all kinds of things. And so I will say, when I say that exits are also have been limited in digital health, it's partly just true of everywhere. But especially in women's health, they haven't happened yet. And I don't want that to dissuade anyone from the opportunity, because I think it's also fascinating to realize how big this space is and can become. So one of the things that we read in the last several months were a couple of articles by McKinsey and BCG on the women's health space in particular, just because it has been underserved for so long, that the impact, for example, in the McKinsey reports that they see on the global economy of both the health benefits and the markets for the solutions and the diagnostics, et cetera, but also the productivity of women by healing and resolving their conditions is up to $1 trillion over the next 5 to 10 years. And the reason for that is partly, if we go back to hey, by the way, most of you probably know that we didn't do any clinical trials on women until my lifetime, which is, horrifying. But even then, a lot of the science that's being done today still isn't separating out the differential. And that, sometimes people think of women's health as things only related to the organs that are different in a woman's body, but actually all these other things present differently, right? So I mentioned before that cardiovascular disease presents differently in women. That's true, actually, of a lot of conditions, probably more than we know, because no one has been studying the difference. But most of the time, the pipeline comes up with, whether we're talking pharma or med device, whatever, a solution, not differential solutions for the, different ways these things present. And so one of these studies I read reported that the pharma pipeline has like less than 10% of the drugs are for women specific conditions or the way conditions present in women. So women have 25% less of a sort of healthy life. I can't remember what the McKinsey report called it, but like disability affected longevity or lifespan. And if we could give women solutions to those issues, they could actually be in the productive workforce again. And they actually equated it to like 137 million new women entering the workforce in terms of the capacity if you got people back their healthy lifespan. And that's for everything from menopause to PCOS to heart conditions, presenting differently, et cetera. And so I just wanted to emphasize that while the exits have been stalled a little bit, the economic impact of these innovations is huge, and there will be, an exit pathway for them.
Yeah, I'm happy to jump in here, Rachel, if you want me to as
Yeah,
well.
I'd love that.
Yeah. Thanks, Kerry. That was a great overview. And I would say, we've gone through this period where there was an enormous amount of activity, and there's cycles, right? There's cycles where there's tremendous number of exits, and we're in a cycle where there are, very few exits. But so from our perspective, the key is really investing in companies that are building to an exit. They pretty much know who their acquirers are going to be. And of course, we never know for sure, right? But that's the idea, is to build the company to exit to a potential set of acquirers versus, I've got this great idea and I'm going to raise capital and we're going to see what happens, which I think we saw a lot of that over the last 5 years. And we just can't, we don't have the luxury of investing in that kind of company right now because the market has such great uncertainty. So I think we're going to see, that's part of what we're seeing. And then also I think there's going to be a lot of roll-ups in private equity because there's, especially in women's health, there are so many companies that are telehealth platforms selling, bioidentical hormones, or, these are not super, from my view, they're not super high value added companies. There's a really important service that's being provided, absolutely, but there's not a lot of differentiation. And so I think it's a tremendous opportunity for private equity to be gathering together this, these sets of companies and creating something where the whole is much greater than the sum of its parts. So I think we're going to see that as well.
Yeah, and just to piggyback on that, to be even more specific, because we talked about this a little bit in our preparation for the panel, is that the buyers or the customers, if you think about big healthcare systems or employers who are trying to solve for the health needs of their, differentiated constituencies, just can't buy or have niche solutions. So they may need a solution for the 30-something, woman employee who is a fertility issue, but they also need something for the older woman who has a menopause issue. And then they need something for the man who, let's say, is experiencing a musculoskeletal issue, and they can't have a single point solution for each of those things. And so we need more platform-based solutions that, allow the healthcare buyer at the, whether it's a provider or a payer or an employer, to be able to solve a whole bunch of needs with one thing. And so that's why I also see that roll-ups or, strategic acquisitions that bring a bunch of these things together to solve a set of problems for the customer make more sense than, unfortunately, what exists today, which is a lot of startups working on, to your point, Pamela, important solutions for people, but not, aggregated. I think that will be a great opportunity.
Yeah, I just, I know I want to give Jessica a minute to jump in here too, but I just wanted to say that I think, venture capital, it's sort of this ethos of focus. And I think in healthcare, that's actually sent people down the wrong path. And so there's been many years of people building point solutions. And now initially the healthcare system was interested in point solutions. And now the healthcare systems by and large want platform solutions. They want a holistic approach to solving the problems that they have. And so I think that got a lot of companies, frankly, are going to, shut down as a result of that. I see you shaking your head, Jessica, so you should jump in here.
She is the perfect person to jump in at that.
Yeah. I mean, I think it's obviously so fascinating to hear this discussion, because I think obviously these themes play out as you think about the M&A path, but they absolutely also play out on the go-to-market path. I mean, to your comment, Kerry and Pamela, employers don't want point solutions, payers don't want point solutions, healthcare providers don't want point solutions. And I think in the end, it also, while you can see great depth there to support the consumer, if it doesn't plug in longitudinally, you also lose the impact for the patient. And I think it's very much something that colored the way that we went to market. And that's why we plug directly into EHRs and providers across the spectrum, because you also just lose the ability to actually touch the consumer at various inflection points in their journey as well, which again, just lessens the impact. So I think it absolutely has to go that direction. And I think kind of looking at it longitudinally is the way we thought about it from the beginning. And I think it's a win-win as a result for all parties when you go that direction. It just is hard to get started from like a broader perspective. But it's the right long-term play.
It is. It's so much harder to get started. And that's why that's why a point solution is so appealing, both to the founder and to the VC, because you can understand it. It's obvious what to do. It doesn't take as much capital, but it's not going to, sure, there are point solutions that are going to do well in the marketplace, but generally speaking, that's not what investors are looking for. So I think that's another piece, Rachel, regarding this is more about the path to exit as opposed to the, the volume of exits or what have you. But and I think this has always been true in healthcare, but designing your company from the start with the right board, with the right advisors. One of our companies, MDisrupt, it's a marketplace for the 1% of the top healthcare professionals in the country, and what they're doing is providing those fractional experts, either hiring for a project or hiring as an advisor or what have you, in order to help these companies get set on the right path from the very beginning. Because in this market, the time to raising capital is probably double what it typically is. So you can't get started on the wrong foot. And I'm so delighted, Jessica, to hear that your company obviously got started on the right foot. It's delightful to see when that happens. But when it doesn't, I mean, obviously companies just are really going to struggle given what it's taking to raise capital today.
Yeah. I think it will be interesting also to see when these roll-ups start to happen. I think I would have expected a little bit of movement already, just given also the opportunity for them to get in there early. But it will be interesting to see if and when that happens, and or if operators start to do it themselves rather than it being more traditional PE that goes in for the roll-up.
I hope they start doing it themselves, because there's, there's a lot of companies out there doing great things that if they came together would be phenomenal.
Right. So much economies of scale there. Can we talk a little bit about, because we've talked about how they start to win, but how the healthcare system sort of impacts that, and changes in the healthcare system that might impact who wins and how they win? That can be for anyone, and you can also decline.
I've talked a lot, so I'll let somebody else jump in.
Can you repeat the question, how healthcare systems have changed and how that will affect who they're buying? Or
Yeah, just,
please
I mean,
repeat, if you don't mind.
without getting just political, just the opportunity for changes in healthcare system and how that may or may not affect companies' longevity, exits, roll-ups, all of those pieces based on the funding and needs of the healthcare systems.
I mean, I can jump in to talk a little bit about what we've seen, but I mean, I think what's fascinating right now is you're definitely seeing so much churn across the system that I think everybody's a little bit in a wait and see type of mode. I mean, even just what's happened with Medicaid. I mean, obviously this is very impactful for a lot of companies right now. I think what's exciting about what's happening right now, though, is there is an embracing of technology, AI, et cetera, within the incumbents like I've never seen. I mean, again, we were lucky from the beginning because we found a home in some of the incumbents to really like build and set up roots. But I think what I have been very excited by is there's more energy than ever, I think, around innovation, around how we create efficiencies. Now, in terms of the expectations, I feel like we're still a little off. Like, I think there's an expectation that a lot of these innovations are going to save money. I don't think that's actually going to be where we land. I think it's going to help us hopefully do the work that's already needed. But I do think that there's an embracing of technology just because of the speed of change and because we're going to need creative solutions given how much churn is happening in the market. But again, I think, what the outcomes will be of some of the innovation, I think people are still trying to get their arms around it. And we may be a little off from that perspective for sure.
Yeah, and I would just say, I mean, I think the pain points are so unbelievably high. So that's driving adoption of things that reduce pain, like, health records that where the information is summarized very quickly and clearly and captured automatically. And, you know, applications where artificial intelligence is just can phenomenally reduce the workload. So those things are happening faster than I think anybody thought they would. But then there's like the Mayo Clinics of the world who, you know, they leaned into this innovation engine that they have. I mean, they're a research, they're an academic healthcare system, and their model, and maybe people here are familiar with it, but they have really powerful accelerator models, both internal and external systems, where they do invest in startup companies, but only companies where it's a strategic initiative for them, where the idea is they're for sure going to acquire the company or they are going to partner with the company and have them be a customer. So they have worked out a model that works extremely well for them and also enables, you know, rapid adoption. I think other healthcare systems, if they're able to actually invest, which we're seeing a lot of them pull back from that, they're now, rather than, I think there was this real excitement maybe 5, 7, 10 years ago where these healthcare systems had innovation teams and they would meet with startups and they would look at new technologies. That's just almost, at least for the people that we meet with, that's almost gone by the wayside. They're just too completely overwhelmed with their internal challenges. And so now they're looking to external experts to really help them make decisions around what to adopt and, you know, where to wait.
Yeah, there's so much there and so much unknown just overall. But I think even with that, the fact that more is being adopted is such a silver lining and a great opportunity for us to all progress forward, especially when much of it is outdated and needing to be updated. I want to sort of start to wrap this up with, I guess, a last thought from all of you from your different perspectives, because I think you all sit in slightly different seats, but it's all evolving rather fast. I think as slow as on some level we feel that it is, it's still moving quite quickly, and capital strategies are changing, founder profiles are changing. And so I guess from all of your perspectives, what's one place either we should be focused on or what's your one thing that you need to share that is relevant to what we've been speaking about?
Well,
I guess one thing that's on my mind, and it may just be from the calls I took with new startups this morning in the healthcare space, is really following the value proposition through to the buyer and making sure that you're solving a problem for the buyer that, you know, frankly is both economic, because that's what's going to drive business decisions, and impacting healthcare outcomes, because that's what the system overall needs to drive. And those motives aren't always, unfortunately, aligned given the way, you know, sort of healthcare incentives happen. But it's so often that I'll meet with a young founder or maybe a founder coming out of academia or somewhere where they're not entrenched in the way health systems or health, you know, providers actually buy, that they have something that is going to, you know, be good for the planet because it's going to help humans. But they don't really understand what system they might be selling into and what drives them. And so when we say the healthcare system or we say payers, providers, we say it like it's a whole bucket of category, but actually there's ACOs and there's, you know, individual clinicians and different, you know, environments in which people are getting paid fee for service or they're getting paid for, you know, these different models. And if you don't break down very specifically sort of who within those ecosystems you're targeting and what problem you're solving for them and how your solution actually, you know, shows them the money and also shows them the outcomes and the things that drive what success looks like for them. At the surface, it just sounds so great. Like, here's an innovation that will make people healthier, but actually getting it through the system is so much harder, and really making sure that that entrepreneur actually understands the subsegmentation of their market and the value proposition that they're providing to each of the players in a very complicated market. It just won't break through. And it takes so long anyways to do these B2B deals. But if you don't really understand who specifically you should be calling on and why they care, it's going to take too long. It won't happen. And I think, you know, that's just hard to, you've really got to get into the nitty gritty and make sure the entrepreneur has already done all that work and had all those conversations to understand who they're really targeting and why those people care.
That was a good one.
Yeah. I was going to say, I don't know if I can say it any better, because I literally was like, be clear on your commercial model. Because it's exactly what I would have said, Kerry, because no matter how long you think it's going to take, at least double that. It's healthcare. It will take longer than you think. And the bar is higher now with investors, with buyers, et cetera. It's going to take longer, and it's about proof, not potential. And so I couldn't agree more. I do think you have to know the system, know how it works, and know how to move your product through it in an integrated way too. I think there's still too many things that live on an island as well that don't integrate with the current system, and as a result, they become throwaway very quickly. So again, I think it's commercialization and integration with the current system are mission critical.
Amazing.
Yeah, I'll triple down on that. Commercial strategy is everything. It always has been, but it's more important right now than ever. And it's always important in healthcare. And I would just say that, we invest across a broad set of areas, into healthcare systems adjacent to healthcare and direct to consumer. Into healthcare systems, payers and providers, things can change so quickly. It's almost like crowdsourcing ideas. Like 1 minute, an idea is not viable, and the next minute it's the idea. And so really being in the mix with people who are very, very close to what's happening is so, so important. And being surrounded by great advisors and a great board. A lot of early stage companies don't have boards. We always recommend, it depends on the company, right? Sometimes very sophisticated founders can build their own company before they have a board. But generally speaking, things are moving too fast today to be ever doing this by yourself. You have to be surrounded by super smart people. But a great example of this is that we would never have thought that we would invest in a company that's focused on B2B doula care. This is, these are clinicians who help women during pregnancy, and they significantly improve outcomes, reduce cesarean sections. They across the board, it's the smartest thing a healthcare system could do and a payer can do to reduce costs and improve outcomes. But there was no model until literally like 3 or 4 months ago. There was a company that we discovered. They've cracked the code, and they are just, they're growing like crazy. So I think it's so critical to be in the mix where you can see when those breaks happen.
I want to do a part 2 on that because I have so many questions as to, I guess we need someone on the insurance and side of it, but understanding how their demand for that changes as we have evidence of outcomes changing with the support of that.
Yeah, the evidence as well as the reimbursement. There's now reimbursement models state by state, even though federally things have changed enormously. States are getting it. They need to pay for things like this because of reduced costs.
Yeah. All right. So part 2 coming soon.
Yeah.
But thank you all so much. This was so fun. I love nerding out on some of this and would love to do it again to dig a little bit deeper, and hope this was helpful for those of you that are listening in, and we will see you all soon. Thank you so much.
Thanks, everybody.
Thanks for having us.